This video is sponsored by Questrade. Get your first $50 in commission-free trades by using the link down in the description below.
Kane is in the building.
What is going on, you guys? Welcome back to another video on the channel. My name is Brandon, and in this video, we're going to be highlighting 3 stocks to buy going into the month of December. As always, if you're new here, be sure to subscribe. As well, stick around to the end of the video. We do have an exciting announcement regarding our investing academy. If you're a beginner, you're definitely going to want to stick around for that. But let's dive right ahead on into our first stock for today's video. It's one that may be new to a lot of you guys out there. It's the company Mercado Libre. The ticker is MELI, and it does trade on the NASDAQ. And what these guys do is they are an e-commerce company in South America. They are actually founded in Argentina. They operate in about 18 countries, pretty much all across the Latin area. They got a wide array of Latin companies that they operate in. And a lot of people do make the comparison logically to Amazon, but actually a better comp is kind of more like an eBay. Traditionally, their platform is more where you can bid and auction for products. Nevertheless, think of this as an e-commerce company giving you some great exposure to South America. And why do I think that this is a good stock to buy? To highlight their Q3 earnings, which was just a couple weeks back, this company, Mercado Libre, is growing like a weed. A very high growth company with revenues up 90% year over year, essentially almost doubling their sales over a 1-year time period. You can see in their main markets in terms of growth. The past few quarters, they've really been ramping this up. Take Brazil, been pretty steady across the board. Argentina actually flipped the switch. They're actually showing positive growth, at least over the last 2 quarters. And Mexico has just been on fire, growth in the triple digits going back about a year or so. And on top of the e-commerce platform, which is growing like crazy, what I love about this company as well is that they have a very popular payment system in Mercado Pago. I really got to touch up on my Spanish there. This is, of course, what we'd consider a digital wallet, right? Where you can link up your bank account, your credit cards, and essentially have your phone and be going to merchants anywhere, scanning the QSR code. We can think to things like across the globe, like Apple Pay, Alibaba has Alipay, and Tencent has WePay. This is basically the South American version of that. And if you ask me, there's not much of a secret that these two spaces, in terms of e-commerce, as well as this payment processing space or the digital wallets, these are 2 of the most important places, 2 of the most important markets to be in today's current day, as well as what I believe to be over the next 5, 10, 15 years. We've kind of seen that with the tech giants here in North America. Hey, that's where they're investing their money, right? E-commerce, payment processing, massive, massive potential. And then you think to a company, or you think to a continent, like South America, which is rapidly evolving. They're growing. Technology, as technology advances, there's just more and more transactions being done daily. To me, a company like Mercado Libre is just positioned perfectly to take advantage of both of these trends that I believe are going to be very, very important. Like I said, that are already important, but are going to be important going forward. And the stock has been on a pretty good run, actually a really good run, reflecting the strong performance, reflecting the strong growth. However, it has seen a bit of a cool off. In the past couple of months, the stock was down actually about 30%. It has picked up. Now it's down about 20% off those highs. Regardless, I still think this dip could be a nice time to consider this high growth play in South America. Like I said, although based in South America, this stock does trade on the NASDAQ. The stock trades for $547 USD. It could be a really cool one to look into. It doesn't pay much of a dividend, but Mercado Libre is the first stock to buy in December. Moving along into the second stock for today's video, we got a bit of a safer play here. It's the company Bank of Nova Scotia, ticker BNS. For Canadians, bns.to. If you're over in the States, it does trade there as well under the ticker just BNS. And Bank of Nova Scotia is the third largest bank in terms of market cap, only behind that, of course, of TD Bank and Royal Bank. These guys actually have the largest presence internationally. It's something that a lot of people don't know. About 34% of their earnings derive from international banking. And we can see they have operations in Mexico, Peru, Chile, the Caribbean, as well as Asia. So a bit of an interesting fact there that many of us Canadians actually don't know. Over the past 2 years, if we were to compare the performance of the big five banks, looking here at the orange line, that's Bank of Nova Scotia, Scotiabank, this one has actually been the worst performer, down 6.87% over the 2-year period. And I did come across an article online this morning. I'll read it very quickly. The Bank of Nova Scotia is one of Canada's big five banks, the third largest by market cap. The bank's inclusion on our list is simply due to the excellent buying opportunity due to its recent underperformance. As history has shown, an investment in the worst performing big five bank has often resulted in returns of 20% or more. And at the time of this writing, Scotiabank is the worst performing bank. And I really do believe in that. That's something that I buy into, and I preach it on the channel for our subscribers. I say this all the time, that the different sectors, the different companies, the stock market is constantly going through its cycles, and assets are falling in favor, they're falling out of favor. And it's very logical to think, why would I want to invest in the worst performing bank when I can go out and buy TD, buy Royal Bank, which have been the best performers over the past 10 years? That tells us absolutely nothing about how the next 5-10 years are going to go. And in fact, as the data shows, or at least what this article is saying, often buying the dogs, buying the underperforming assets, they turn out to do quite well for you if you're willing to buy into that weakness and ride it out. So I always like to say, with the big banks here in Canada, it's kind of tough to go wrong. Like, I'm a big fan of holding the banks for the long term as an investment because of the income, because of the capital appreciation. I always like to say, hey, go pick maybe your own bank where you bank as a starting point. But because of that weakness that we've been seeing with Bank of Nova Scotia, it is actually offering a nice entry point, at least of the five banks that we look at here. Its P/E ratio is somewhere along the lines, depending on what source you use, anywhere between 9 and 11, which is fairly cheap, very fairly valued. Not to mention that you're pulling in a really nice dividend with the stock at 4.72%. They've actually increased their dividend for 43 out of the past 45 years. Been growing it at about 6% compound annual growth rate there. So with the stock down off its highs, again, what I believe to be showing value of the options, not only are you going to be pulling in some nice income, but there's also the opportunity for capital appreciation, which is a double bonus. The stock trades for $76 Canadian. Again, it pays the 4.72% dividend, and Bank of Nova Scotia is the second stock to buy in December. Moving on to the third and final stock for today's video. This is one that we do talk about, it feels like, all the time on the channel. It's the company Activision Blizzard, ticker ATVI. It trades on I believe it trades on the NASDAQ. And this is, of course, one of our major players in the video game space. This is the producer behind the Call of Duty franchise, as well World of Warcraft, just to name a couple. This is a stock that, as you guys know, I've been buying quite heavily after the drop we experienced in 2018. It has actually picked up a decent amount. It's up actually about 26% off these lows. I've done quite well on my this batch of positions. That said, I still believe there's more room to grow, as we still are down a fair amount off of these 2018 highs. And for anybody that is new to the channel, new to the company Activision Blizzard, again, this is one of the gaming companies, one of the major players, and they have been going through a bit of backlash. There's been a bit of tension growing amongst their own community, amongst the gamers, their audience, their players, basically with the complaints that the company is over monetizing their games too many in-game purchases like microtransactions, skins. The community is saying as well that they're not listening to the feedback. Basically, the company is just becoming far too corporate and they're not listening to their core audience. All they care about is making money. And we have had a lot of gamers, a lot of people coming out saying they hate Activision. They won't buy their games. They're going to boycott the company. A few months back, we also had a bunch of layoffs that took place. I think it was about 700, 800 employees that they decided to lay off. So just an overall very, very negative narrative. So why do I think that this is a good stock to buy? With all that being said, well, if we take a look at their recent report, their Q3 earnings report, believe it or not, people still went out and purchased the games. Despite all the hate, they actually posted better than expected results. They beat revenues by $100 million. They had a strong beat on earnings per share. And to highlight a couple of key segments, during the quarter, Activision had 36 million monthly active users. Their other division, Blizzard, not far behind at 33 million monthly active users. And then King, their mobile division, maybe you know them through the company Candy Crush, 247 million monthly active users. So people are still out buying the games. What do you know? And there was an article that I actually saw this morning where the CEO said there's no good reason that Activision won't reach 1 billion users within 5 years. And we do, of course, have to take that with a grain of salt when it is a company CEO making a statement like that about their own company. But at the same time, it's kind of hard to argue with that when we all know how fast the video game sector is blowing up in terms of the rise of esports, and not just Activision, but really the entire industry is benefiting from this tailwind, which is just rapidly growing in popularity. It is quite difficult to buy into a stock that is dropping severely. They're laying off people and there's a lot of negative sentiment, a very negative vibe towards it. But in most cases, if you do believe the company is going to be around for the long term, which I do in the case of Activision Blizzard, usually buying into this weakness turns out pretty well, at least for the positions that I've taken. Already I'm doing quite well on my Activision position. I'm also super excited for the games they have in the pipeline for 2020. Overwatch 2 is a very highly anticipated game. Their recent release of Call of Duty Modern Warfare, which is a great game. This one set records right off the bat. I actually read last week, this is the best-selling game of 2019 so far. Even reading here, their Call of Duty Mobile partnership with Tencent, this is off to a great start. So, especially not to mention with the holiday season coming up, we got Black Friday, we got Christmas. These are usually the best quarters for these types of companies. Despite the negativity, I'd expect to continue seeing great numbers posted. I'd expect actually a really nice earnings report coming up following the holiday quarter. So despite the stock making up some of these losses, I still believe there is more room to grow. Again, this is a stock that I've been personally adding of the options available out there. The stock currently trades for $54 USD. Again, pays a very small dividend, but Activision Blizzard is the third and final stock to buy going into December. So guys, those are my 3 stock picks for the month. Do you like them? Do you not like them? Leave a comment down below sharing your thoughts. As always, if you enjoyed the video, if you found it helpful, feel free to give this one a thumbs up. We do have more stocks to buy videos. We have an entire playlist. You can find it on our channel. Maybe I'll link it down below this video as well. If you managed to stick around till the end of the video, I am very excited to announce we are going to be doing a bit of a promotion on our Investing Academy. For anybody new to the channel, this is our online platform where we help beginners, like total beginners, go through the entire process of getting their account set up, getting their portfolios built. We work through spreadsheets. We basically go through the entire process. If you are a beginner that's looking to get things started, as an incentive for enrolling in our online programs, you will be receiving a free or an included coaching call for each of the students that signs up from now until the end of the year, kind of like a New Year's promotion. You will be receiving a little bit of a bonus one-on-one time, phone call, Skype, just a session that you can go through and ask questions, maybe get help with setting things up, along with the training program, which does take you step by step. If you haven't got the chance to check out some of the testimonials that we have come through, we've had the course up now. I think we launched in late August. So a few months, we've had some amazing testimonials, really just trying to help our students get the results of going from nothing and thinking, hey, this may be too hard to tackle. Not at all. We just take you step by step to the point where you have your portfolio built, you're making some money, generating some passive income, and really just having you on your way. You can learn more about that down in the description below. It's that first link down below. Learn more about our Investing Academy. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.